Welcome, my name is Lars von Thienen. Welcome to Cycles TV. Welcome to a new year of weekly cycle analysis. So thanks for joining me today. And I see we have lots of you also live on the channel. That's good to see. I hope you had a wonderful yearly break. You're recovered a little bit from last year. So let's restart our live weekly sessions here. I will now continue doing these weekly sessions here. At least I'm committed to do 2 live sessions a month, maybe pre-record some other special sessions here. In addition, we will bring in additional live guests here into the show, so I hope it will be an exciting 2022 here to do our cycle analysis here together. What do I want to analyze with you today? So I want to make a basic rundown of the current dominant cycles in the main markets, especially the S&P 500, with reviewing the weekly and daily cycles for today. In addition to that, we will also check the financial stress index from the St. Louis Federal Reserve Bank, which is an interesting weekly analysis set. So let's kick it off with some basic cycle analysis, a new year. Let's have a look at the global markets. You know that in the last year it was as the straight up rundown of the global markets. It was not easy for cycles to get any clue, at least from the daily or weekly cycles. It was interesting short-term intraday, but we will not cover intraday here in the show. So that's it for today. I think we will try to run 20 minutes as I'm here live. As always, I would encourage you to ask your questions, put your questions in the chat sections. I see already the first questions rushing in, so I will keep an eye on the chat section. At the end, I will spend some time to review your questions. So please excuse if I'm not doing everything in sync with the questions, but finally, I will review all your questions at the end. And please stay here, stay with me live if you want to discuss something with me, or if you want to get an answer of some important things. Maybe I will find the time to review your question. Okay, so therefore, let's kick off the year with the global markets. And in order to do this, I will begin with a very important chart. And we did this analysis, by the way, here on the channel back in October. And I'm talking about this weekly cycle analysis you see here on the chart. I will even make it a large screen here. This weekly, sorry, it's wrong here. This weekly analysis here of the S&P. It is a weekly cycle model. We did this here live in this session as we're doing it now, so I will not repeat the process here. It's the main process we use always. 3 cycles have been detected on this weekly chart by our cycle scanner. So a cycle with a length of 143 weeks, a cycle with a length of 186 weeks, and a cycle with a length of 381 weeks. Keep in mind, this is a weekly composite here. The composite in this chart is shown here at the bottom of the chart. So this line here, which I'm just showing now, has been the forecast of the cycle scanner here, overlaid, and the dark blue here is the current price action. And we did this mid of October, where at the first point in time, the general cycle outlook changed. And you could argue, I mean, this this analysis or projection was quite wrong, and I heard this feedback quite often, but I would argue against it, because what the cycles showed us here in October, and these are marked with the green and red faces here on the chart, and the faces are purely labeled by one, the composite turned down from a timing perspective. Yeah, the area is marked in with the red background, and when the composite cycle turned up until the next turning point, it just highlighted in green. So it's just coloring the phases of the composite cycle, which is also a quite interesting way of visualizing the output of the composite, because as I often try to repeat, the composite which you build out of your cycle analysis is not important in regards to the absolute price turns we might expect from the overlay. It's more about spotting the periods of time when maybe the next important change in market rhythm is to be expected. And this is what we highlighted here in mid of October. That's also the way I want to revisit this chart and then update this to today's price action, as we have now moved at least two months into the future here. So therefore, let's start with this. And if you review how the red phases, so by mid of October, we entered here from the cycles into the critical period now, which extends into 2023 from the long-term perspective. Then the next green area starts to emerge, which has been set us on alert since mid-October here, that the main behavior of the price action is expected to change. But never use this kind of analysis that at this point of the day, the price will crash down. That's not how we use a cycle, at least not from the weekly perspective. So therefore, if you just revisit how the last red area played out, this resulted in a high volatility price action. So we also saw wide swings of the price in either direction. But in general, if you compare the entry and the exit, it was more or less a sideways move if you compare this red period to the previous green and the past green period. So in a strong uptrend, which the last uptrend phase here signaled, this red area could lead, in the best case, into a sideways move of the markets, or in the worst case, as it did here in the previous phases, in a downswing of the market. So the best case scenario, if these composite projection played out, could be to expect then sideways market since mid of October. And I mean, this is exactly what happened, wild swings, but in general, we just moved sideways. So sideways. Sorry for that. So, I mean, we are interested in the situation today. I will fast forward in a second, but that's important to have in mind. So therefore, don't get nervous if markets don't act exactly at the point of the day. This is a weekly analysis. And now let's have a look at the current behavior or the current chart. So this is now the weekly. I need to arrange my screens here. This is now the weekly S&P 500 updated to today. So, and this is, I think it's not today, but this is, that's Monday. That's at least today's market action. And to start with the daily analysis, or to show it even from the daily analysis, I mean, I'm talking about from October. This is where we started the analysis. This is now where we are. So this is more or less, I mean, for sure, we pushed up, but the market then came back down. Again, pushed up, came back down. So since this point in time here, so this is somewhere here mid-October, this is where the red phase of the weekly cycle has started. And you see that the strong uptrend here until this period has now been at least stopped, and we are now seeing high volatility. But overall, since mid-October, we are there where we started mid-October here. So we are now at a very interesting point to see whether cycles really might turn down the market. So then we need really to see some more breakdown in the markets, or if at least it's more a sideways pause condition. So therefore, let's update the cycle analysis on that. As said, always, we are not doing any market or trade recommendation here. It's just pure cycle analysis. So you should add your additional knowledge on technical analysis for sure into the mix here. Okay, so therefore, let's update the cycles here to the current state. And before that, we start with the weekly to see if the weekly cycles are still valid. So as we have now passed 2 months more in time, So we see that the cycle, or the dominant cycle, which we saw with the length of 186 weeks, you remember the chart I showed you, now moved into the dominant cycle with the length of 185 weeks. So more or less the same cycle as I always talk about. That's the nominal cycle has not changed. So it's the largest amplitude. It has a green triangle in regards to Bartels score and the strength score. So it's on top of the list here based on the Bartels and the strength score. So this is always the same procedure. So no really individual fine-tuning what to pick. We still use these weekly cycle, and we see we are late, yeah, in regards to this cycle, we are still late, but anyhow, that's expected. And if you know my articles on the skew of cycles, this is anyhow to be expected at large upswings, because upswings will last longer. Therefore, it's skewed to the right, and downturns are shorter in time and then faster. So therefore, the down move is skewed to the left. You can apply this also in the settings here, but I will not go into the advanced setting. So if an up move is a little bit on the right part of this topping window here, which is still valid, so we can declare this here as the period and time where a top should be expected from the timing window, which we are clearly in. And we now need to see if markets continue to move down, or at least sideways, which will be a confirmation that we can trust this long-term cycle or not. And therefore, we always should analyze also different data sets. So therefore, let's now switch to the daily chart of the S&P to see if the daily cycles tell us another story here. So we just load up the daily S&P 500. We will check the spectrum at this point in time. We will see a peak here around 167 days in this case for the dominant cycle. This is anyhow interesting because a cycle with a length of 170 something has been, at least in the cycle analysis, a dominant cycle which has been detected, not useful in trading the daily cycle in this more or less 2 years of straight upturn here, but at least it seems to be an active cycle in the series, which has been overruled by the longer term weekly cycles we saw. So the weekly cycles I just showed you before seem to be much more stronger than the daily cycles. So therefore the swings here in the daily cycles could not have been seen, because the weekly cycle, all these period here has been pointed upwards. So if you just color code this, as I tried with the other chart, this has been the green period here. So you can mark this is always the upswing period of the weekly cycle. But this period from the long-term perspective now changed to red. So we are now from a long-term perspective entering this period here, which, if you follow the cycles within cycles approach here, should lead that we should now be able to see the downswings of the daily cycles on the price chart, as even the weekly, the long-term cycles now switched their structure to a downwards projection from the long-term cycles. So let's zoom in here. So the daily cycles just rolled over here now. So the current updated 170-day cycle is rolling over here now into negative territory too. And if you followed this live session here during the last weeks, I think end of November, I told you about that the weekly cycles have rolled over mid of October, but the daily cycles, and you can recheck this if you just review the weekly live cycles TV sessions we did here together, that I told you that the daily cycles might expand top until the end of the year, because the daily cycles top was already projected to come in at the end of the year, which now has happened. So there's no change in this projection here from the daily cycles. But the interesting point in time is that now we have, since since end of December, beginning of January. So since last week, and that's the reason I pulled this up here for this Life Cycles TV here. Now we have a cycles within cycles alignment between the dominant weekly cycles. The 3 dominant weekly cycles are now in sync with the downturn on the dominant daily cycles. So this should really break the long-running uptrend. And for the bulls, the best term scenario would be sideways move now, just stopping the strong uptrend. I don't know. We can't make any projection in regards to the amplitude or to the expected price swing, as we're doing time-based cycle analysis here. So now to add into the mix, so we have the weekly S&P, we have the daily cycle updated. Let's have also a look at the confirming indicator, which I like often to bring into the mix, which is the financial stress index. So if you have any measurement on sentiment data sets, because right now we have just analyzed price action, which is in the end, it's a lagging data set anyhow, because price is just the consequence of something which happened before. For example, if you follow the behavioral finance procedure or theory, which means sentiment is more a leading indicator. So if we have any data set which might give us an indication about the current sentiment of the market, and we can find cycles and sentiment, this could give us a leading clue anyhow. So therefore, we should use any data set which helps us in using a sentiment data. And what's just freely available is the financial stress index from the St. Louis Federal Reserve Bank here. So we just pull up their data set. It's not our data set. It's a weekly data set, which is updated once a week. I mean, I think we are lagging here 1 week, but in general for weekly data, that's not as important. So this is a very long-term perspective of the sentiment. You see the raw data, the absolute data is hard to get any clue out of that. Sentiment data has to be read the other way around. So a low in sentiment measures is often an indication in top in the markets and the other way around. So a high indication about stress. So a top in the sentiment, which is here the so-called financial stress. So a high measurement of stress should relate to a low in the market. So just to be aware of if you analyze financial stress index here. Let's do the same procedure. Weekly data, we look at the spectrum. What we always look for is for 1, 2, or maybe 3 cycles which stand out in the spectrum in regards to, from a visual perspective, you want to see a peak in the spectrum. That's the visual to explain it. Which means that high amplitude, clearly separated, not a too flat peak. The best would be a clear, really peak here. And then the other cycles really with a lower amplitude on the left and the right. So this is what we see here. So this, if you have lots of peaks beside each other with similar highs of the amplitude, that's a very hard picture to read. And these are then the cycles to select from the list. So which is kind of the visual point of view. It's the same in the table above. So the triangle here shows us a green triangle. It's the Bartle score. So a statistical verification that this cycle is also from statistical point of view in the data set, which means that we had lots of repetitions of this cycle. So for example, digital signal processing could identify the cycle, but then maybe it just had been relevant 1 or 2 repetitions, which is not enough if we want to use it for projections. The Bartle score gives you an indication about if also it has been repeated several times in the whole data set. And the better the Bartle score, you see that it's not a random effect that the cycle one time was there and then was off, which is good from digital signal processing to detect. But the Bartle score then also gives us confirmation about that it really repeated a lot of times, to say it in simple words. And the size of the triangle is just an indication about the strength, so the relative amount of price change per day, per week, as we're using weekly data here. And this in total then helps you to select the cycles, which is here then on, where is the 100? 198, right? 198. There are cycles which higher strengths, but this is just a minor deviation. And then you quickly get down to the cycle here, 198 with the high Bartle score, still high strength score, and great amplitude. I will skip the other shorter term cycles. As you also see in the spectrum, there are lots of peaks here on the lower range of the length, but you clearly see there's just one green cycle which could be used in addition, but at least from the lengths and the strengths here, this is the one to pick here. I think this should be common sense in this case here. And if you select this cycle, it's already shown as an overlay here. You see that this cycle is in alignment for sure from the past with sentiment data. And you also see what this cycle here projects from the current status quo of, and this is sentiment data. This is not analyzing price data. It's not the 185 weeks, which we got on the weekly price data. Is here now around 200 weeks on the sentiment, which is, but then in regards to the phase where we are, this is low in sentiment. So this also shows us that we are at a sentiment low or a fear low or stress low, which from the sentiment data indicates that we can see now turn also in the financial stress. So stress should move up now in the markets from this sentiment stress cycle here, which started already to increase. I mean, just looking at the last weeks here, you can see that it started to rise up. I mean, we don't know if this will continue, but at least from the long-term cycle perspective, this indicates that we should expect the financial stress to rise now, which is a confirmation that the markets are in a very negative condition from price cycles, weekly cycles, daily cycles, and stress cycles here. And that's the key message here. You should now add your technical analysis skills into the mix here. So never just trust the cycle analysis alone to make or to derive any market action out of that. But I think, and that's the reason I wanted to focus these 20 minutes here on the main markets and the S&P, because in the last year, we have not seen these nice situations. Yeah. So the last year, daily predictions on the S&P 500 have not been useful at all. Today, or in the first week of January, for 1.5 years, we have the first situation that the cycle analysis on the weekly, daily sentiment data has now get into alignment with the clear message I try to bring across. So be careful in the main markets, do your technical analysis for sure, which needs to be added. And then hopefully we can revisit this analysis in weeks or months to come. So that's it for today. I hope you like the live analysis here on the global markets. I for sure don't want to pay attention to crypto today. We had a lot of attention on crypto in December and November. If you have followed our live analysis market forecast, you know already about my crypto projection we did and from my colleagues. So you're invited to review these sessions. And for next week, already in the planning, is a special guest here on the show, which is an expert on crypto again. So I will reveal more until next Monday comes. So please follow the announcement here on the YouTube channel for Monday's next week's show. I will put more into the details during the next days as I need to finalize the arrangement with the special guests here for next week. But then next week, Monday, I can more dig into some live crypto analysis with a special guest here again. So just as an outlook for next week. So if you want to discuss some questions, I will now bring the attention to your chats area. So and please feel free to drop in your questions now. I will stick here now for some minutes to get hopefully answers across. First one, Lars, Joan, when the spectrum shows us only big flat masses with no green battles at all in large cycles, but small cycles dual, does it mean we are in a transition to start a large dominance? I mean, it's a good question. At least if we are in a transition, I cannot answer for clearly. But if you see a flat or a plateau of a peak with no one clear peak, then you should be careful with picking this cycle, because this means that the digital signal process was not able to isolate exactly one cycle. So there could be a mix of a lot of cycles which are then in the spectrum just are added up and ended in this plateau, which might be then seen, which does not give you a clear indication that there's one dominant cycle, and maybe the visual chart is not able to show that. So a flat peak in a spectrum, and therefore it's also important. So therefore I like your question, John, because if you just look in the table, yeah, it will show up as a peak, because even a plateau has somewhere a peak. So the table shows you a peak, but it will not show you if it's a flat peak or a very sharp peak. So therefore it's always worth to have a visual check into the spectrum, how sharp or flat the peak is from the table. John, therefore, and yes, for sure, it could mean that a transition comes and it's like that the cycle is not clear dominant right now. So therefore you see a lot of cycles detected, and then in maybe 2 or 3 months, you will see that the other cycles will turn down, and then the spectrum gets more sharp. So it starts with a flat one and then gets more peak. But it's not always the case this way. So therefore, it's no general finding from cycle analysis, but it could be one way to do this. But bottom was also late in the start. Yeah, therefore, you need to be careful with the skew. And that's the reason I have not added the skew factor, because a skew, maybe, I think it was the daily chart, I talked about the skew factor here, and your question was related to that, could also be the case because of more cycles adding up or stacking up and then showing the skew, or even a longer term cycle which acts to the skew. So therefore, the field of skewed cycles, it's not only caused by this mathematical skew, or the skew that upturns last longer and downturns are quicker. That's in general an observation which you can find in research out there, but that's not always this simple answer, and therefore I agree with you. Exercise, you cannot. It's not as simple as putting a skew on with a click in the settings. So therefore, I'm in most cases not doing this here on this channel, because it requires a little more knowledge about how or when to use skew factors in your analysis. Okay. My question is, why the dominant cycle on the left under the chart? Yeah, okay, that's also Eric, your question you're talking about, and let's bring in the chart. And you said, why is the dominant cycle, which shows up with 40 here, shown, but I picked the one with the length of 198 here. So and this might be misleading for sure if you just have a look at the numbers here, but let me try to explain the reason for that. So I need to go clean up the chart here so that we can go back, and I will first change a setting here, ensure that the scanner and Explorer are using the same range. Disable. Okay. And we start with range 30. So I'm just setting the same settings here to explain it to you. Just give me a second. So the Explorer and the range minimum at 30. So it's just minor settings, but now you still see the 198 here. So I've not changed the analysis in general, but it makes it easier to explain it. So the question is, it changed now from 40 to 34 here in this example, but the question is the same. So why didn't I select the 40? Didn't I select the 35 here? Instead selected the 198. So that's the question here. And the reason for that is that the dominant cycle, at least which is listed here in this chart, is purely driven by the highest strength here. And that's why if you set the configuration, how the scanner and the cycle extraction work the same, this shows up also at the top here of the list. So the highest strength, and then you see it sorted by strength falling, then this is a lower strength score compared to this one here. So this is a kind of the automated algorithm will just pick the one with the highest strength, and the strength is just calculated by dividing the amplitude divided by length. So these two values are taken into account to derive the strength score, which seems that even though this is a very small cycle from a length perspective here, the price change per bar is higher than the price change of this cycle here. So, and this is not visible at first. So therefore, you should always have a mixture of, or at least I would say, this is a very short cycle and this is a very long cycle. And I'm not really interested in the short-term cycles, because a cycle with a length of 35 is a very short-term cycle, which won't give me a clue here on the long-term perspective. This might be just interesting for short-term projections, but you see it's even hard to make it visible here as an overlay. So this is a very short cycle if I would select it, which is not in sync with the long-term behavior of the price data here. So therefore, yes, from a mathematical point of view, from the pure digital signal processing, applying mathematical calculations, this is more dominant in the shorter term. But from the longer term, you see it's more or less a similar strength here. But in regards to the length, there's a high deviation in the length. The partial score is more or less not really the case or the reason for choosing that here. But this is a much more longer term cycle, which influences the long-term perspective. And then you could also add the other one into the mix here, but you see from your long-term projections, the long-term projections which we are interested in is not really changing if you add the shorter one into the mix or not. Yeah, and you also see this from analyzing past behavior. Yeah, so these peaks here in the sentiment data, they follow this visible rhythm here, and the short-term fluctuations might not be as useful here. So therefore, that's why I often skip the so-called dominant cycle. So be careful with using this dominant cycle. That's also why I don't often use it here. It has a special meaning, at least if you want to have more automated view. But Eric, I hope this helps here to explain why I'm, or to, in simple terms, then also to explain it this way. Start from the right-hand side of the spectrum. So I would, in most reasons, I come from the right-hand side of the spectrum in regards to length, and first would look out for peaks in the spectrum from which have the very long length score, so long-term cycles with a high amplitude, which might not be the on top one or top two of the list in regards to the strength score, but at least in most cases can explain the long-term behavior of the data set you're analyzing. Okay, so farmer grazing. Hi Lars, I joined as a member last week. Where can I find a tutorial on using this Cycles app? Yeah, that's a very good question. I need to excuse, we are not the best in ramping up the manuals and explanations. So first of all, I would invite you, please join every week here on Monday, because that's also, I try by, in addition, analyze some live data sets. So I will not use something from the past and do some marketing. Hey, how great it was. We will use live data here. But the second objective of this session here is to show you how to use the tools. So the objective of the weekly sessions is also to teach you and to explain you about how the usage on the app. I mean, it's not an answer where's the tutorial, it's more an answer really. The weekly shows are also a tutorial on how to use it. And I hope I'm not wrong, but if you browse the Cycles.org website, somewhere on the navigation, there must be a tutorial, or I would ask you, please write us an email, because Liz, our membership service colleagues, Liz and Bill, can guide you to a video and a documentation where it is. So I don't have the link at hand, but please send us an email and you will receive an link to some videos and a tutorial. Liz or Bill might answer, hopefully. But that should be the starting point. I didn't receive the day 2 recording yet. Is there recording? So Yannick, yes, there will be a recording, or the recording is already there. Maybe it has not been prepared or set up or put to the side. So the recording will be there. If day 1 is already there, day 2 will follow. But I can check back also with the colleagues what about the preparation or after preparation. So please check out the link you have for the day 1, and day 2 should at least show up latest somewhere this week here. I can't name a day here, but maybe it was just the weekend in between, so it showed up during the next days. Okay, so I think that's it for today, as I can see all your questions in the chat, and that's anyhow the purpose of this session here. So if you are new to the channel, please continue to follow this channel here weekly, as this is the important place also to raise questions. I know we can't help everyone in individual questions and how to use cycles, because it's often the case about knowledge on how to use it. But this channel here, I will really try my best to answer your question on cycle analysis, because that's the reason why we're doing this live sessions here. So please make a note in your calendar. Monday, same time, same place. This is your place to be if you want to learn something on cycles, and if you want to use the chance to reach out to me live, as I just need to excuse I can't write any email we get here. So please join and bring in your questions. Comment on the video down below. I will have a look at this and take your questions and comments into considerations for the next streams to come. So thanks for being with me this week. Have a wonderful year, wonderful start in the year. All the best to you, all the best for the year to come, and I hope to see you next week, same place, same time. Thank you. Bye.